We'll be going over the IRS Interactive Tax Assistant tool that helps taxpayers determine how to claim any gambling winnings and or losses when filing their income tax return. In general, uh, you have to declare gambling winnings of any amount. However, a casino or other gambling establishment may only be required to issue this information on Form W-2G under certain circumstances. Generally, if your winnings exceed a certain amount. You can deduct your losses under certain circumstances. Generally, if you're itemizing deductions on Schedule A of your income tax return, then you would be able to deduct gambling losses up to the amount of your winnings. However, if you have no gambling winnings and you only have losses during the tax year, it's going to be very difficult for you to be able to claim those. However, this tax assistant kind of helps you walk through these scenarios, and what you're going to need is yours and your spouse's tax filing status, the amounts of your gambling winnings and losses at hand, and then any information that was provided to you on Form W-2G by the gambling establishment. So this interactive tax tool is specifically for U.S. citizens and resident aliens. For non-residents or dual status aliens, you may need to refer to the International Taxpayers section of the IRS website for more detailed guidance. According to the IRS website, this should take about 10 minutes. We'll walk through a couple of scenarios and then we'll see where we end up. As a precaution, as always, this is not tax or legal advice. This is simply walking through a couple of scenarios through an IRS tax tool, which helps people understand their options in certain circumstances. If you need detailed advice specific to your tax situation, you should always talk to a tax professional in person. Let's go ahead and begin. So we're going to click this continue button to proceed, and we're going to, at the time of this filing, we are still in the 2023 tax year, which means the interactive tax assistant for 2023 is not available. We're going to use the 2022 tax assistant. So in this case, are you engaged in gambling activities as a trade or a business? Let's say no. Did you receive any winnings? Let's say no, we didn't. So in this case, because gambling losses can only be deducted up to the amount of gambling winnings, you can't deduct them on your tax return. Let's go back and change this to yes. So how were your winnings paid? Did you receive cash? Did you receive non-cash prizes, or did you receive a combination of both? Let's just say we received cash. So did you receive the cash winnings in installments? Let's take a look to see what installments are. So generally, if you win a state lottery prize payable in installments, you have to include in your gross income the annual payments, and then any amounts that you've received that are designated as interest on the unpaid installments. So, and then it goes on to say, if you sell future lottery payments for a lump sum, then you have to report the amount you receive from the sale as ordinary income in the year that you receive it. In other words, for state lotteries that are paid out over multiple years, if you receive a lump sum, it's all ordinary income in that year, as opposed to stretching it out over whatever the period of time is that you would normally receive that payout. So let's say, no, we didn't. Did you have gambling losses? Well, let's say that we did. Do you have a diary or a similar record of your gambling losses and winnings? So You're supposed to keep an accurate diary, and it should contain certain information like the date and type of wagering activity, the name and address of the establishment, other people that were with you, any amounts that you won or lost. So this is, this is how you would do this. If you can also generally prove your winnings and losses through Form W2G, Form 5754, which is the statement by a person receiving gambling winnings, you know, tickets, canceled checks, substitute checks, credit records, bank withdrawals, things of that nature. So other documentation, but most professionals usually keep an accurate record. So let's say, yes, you did. Are you itemizing deductions on Schedule A? Were federal income taxes withheld from the winnings? So you have gambling winnings to report, which you would report on Schedule 1, and you can deduct your gambling losses up to the amount of gambling winnings that you reported on Schedule A. You would include federal income tax withheld on the proper withholding line of your income tax return, and then you would attach any Form W2Gs that you received. I'm going to go through one more example, and we're going to go back to the first question, which was, the second question. Are you engaged in gambling activities as a trade or a business? Did you receive any gambling winnings? How were they paid? They were paid in cash. You received a lump sum. You did have gambling losses. You did keep a diary or records. And you're not sure if you're itemizing deductions on Schedule A. And federal income taxes were withheld. So in this case, you're required to report your gambling winnings on Schedule C if you're considered engaging in gambling activities as a trade or a business. So you have to determine for yourself whether or not you're in the business as a self-employed person in the business of gambling. And if that's the case, then you would report your gambling winnings on Schedule C. You would report any gambling losses or any related trade or business expenses, travel expenses, for example, on Schedule C. Now you still cannot deduct the amount more in gambling losses than what you won. So it's still, you can't create an overall net tax deduction for your gambling losses. You can only deduct up to the amount that you won. So, and this would be considered self-employment. You would also have to calculate self-employment income tax if that's applicable. So this is the last example we're going to walk through. But what I usually recommend in these videos is that take a close look at the review screen at the bottom, print it out. You can hit the print button right here. And what this will allow you to do is you can take a closer look at each of these questions, how you answered them, and be very sure that you agree with the answer. And this is an opportunity for you to kind of check yourself. Wait, hold on, let me change this answer because I think that I answered that incorrectly, so on and so forth. And then once you're sure that the review screen reflects what you plan to report on your tax return, then go ahead and print out a copy and keep it with your tax records. So if you made an honest mistake in the reporting of this, the IRS will likely catch it, and if it's a significant amount, either that you owe, for example, then you might be contacted by a revenue officer to discuss this, or you might receive a letter just stating this is how much you owe. But if the difference between keeping records and not keeping records is if you are questioned by an examiner down the road and you have this in your records, it's at least one step towards documenting that you took due diligence in terms of properly reporting your taxable income in calculating your tax bill. What you don't want is for someone to start off by asking basic questions and you give the appearance that you just completely threw numbers in the air, that you didn't keep good records about anything, especially when one of the questions is, do you have a diary or a record? So if you keep this, this kind of shows a little bit of due diligence, a little bit of care in properly calculating your taxes. If you owe taxes, you're still going to have to pay that tax plus interest. However, the odds are more likely that you'll avoid any accuracy related penalties, any um, any any other penalties that you can be susceptible to for misrepresenting, like a reckless disregard for the tax law. So accuracy related penalties, any kind of negligence or even fraudulent tax bills, you want to stay away from any of those penalties as possible. And even though this review screen is not tax advice, just demonstrating that you took the time to keep records may earn you some goodwill in the long run. So we mentioned a lot of other schedules and forms in here. We'll go ahead and put links to those in our show notes in our video, and you can also check out the articles we've written on those on our website. Simply go to teachmepersonalfinance.com, type in the IRS form or the schedule that you're interested in, and you should see it in our search results. If you like our articles, please subscribe to our newsletter. And if you like our YouTube channel, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic you'd like to see in an upcoming episode, please feel free to post a comment. Thank you very much and have a great day.